If you spent any time in the online personal finance community, you've heard of Vanguard. Vanguard funds are particularly popular among YouTubers. Vanguard has a very special structure because unlike most investment management companies, it is not publicly traded. That unique structure allows it to offer very low management fees. If you've heard a YouTuber talk about Vanguard, you'll often hear VTSAX. That is the ticker for the US total stock market. However, if you are interested in investing in something different based on very specific goals that you have, I can tell you about 5 more Vanguard funds that you probably haven't heard about as much. In this video, I go over 5 funds, their specific goals, their fees, their performance versus the S&P 500, and the corresponding ETF if you do not want to buy a mutual fund. For the sake of full disclosure, I am simply sharing them for entertainment purposes. But first, here's a little bit about me.
Hi, welcome to my channel. Thank you for watching. Here's a little bit about me. My household consists of myself, my husband, and my toddler. My mom also lives with us, but she's not included in our finances. We live in a high cost of living city in the Northeast. My husband and I both went to graduate school, but fortunately, we no longer have student loan debt. I work in banking and he works in aviation. I take care of the family's finances, and I love my role as the self-appointed CFO. I love to talk about all things money, whether it's investing, saving, or making money. I look forward to sharing a wealth building journey with you. I look forward to getting to know you, and I hope you enjoyed this video.
Today we have a video on every YouTuber's favorite investment company, Vanguard. Refresher before I get started. Vanguard was founded in 1975 by John Bogle in Pennsylvania. It is one of the largest investment management companies in the country. As of 2021, they had $7 trillion under management. Vanguard popularized the low-fee index fund, which has made investing simple and affordable for the average American. But often you'll hear all about VTSAX or VOO. VTSAX is the mutual fund version of the US total stock market, and VOO is the S&P 500 index ETF. But there are some others that I think would be interesting to look at if you are looking to shape your portfolio in a very specific direction. Of course, none of these are recommendations. You will have to do what is best for you as an individual investor. I thought it would be a fun exercise to go through. The first fund that we are looking at today is the Vanguard High Dividend Yield Index Fund. This fund is best for investors who are seeking dividend income. The first one on the list here is a little bit controversial. There tends to be this very polarizing discussion whenever it comes to dividend investing. On one hand, you have the people who are in favor of it. It is a way for them to get passive income, and I mean, who does not like getting something for nothing? There's very little effort that goes into getting dividend income. On the flip side, there is also a lot of argument against dividend income because of the tax drag if you have it in a taxable account. And even if you have it in a retirement account where taxes are not a concern, you are still put in a position where they consider it a forced sale of your assets, because sometimes your stock price will drop. It's not a dollar for dollar, but it will drop by an amount that closely matches the dividend on occasion. There are plenty of dividend bulls out there, but if you are looking for an alternative opinion on dividends, you can look up Ben Felix. He made a video called The Irrelevance of Dividends. The inception date of this fund was February 7th, 2019, so it's a pretty young fund. And then the investment minimum, at least if you're investing at Vanguard, it is $3,000. As I stated earlier, Vanguard is known for their low cost funds. So you would not be surprised to hear that the expense ratio on this one is pretty low. Not the lowest, but it's relatively low, 0.08%, or the equivalent of $8 per year per $10,000 that is invested. The corresponding ETF for VHYAX is VYM, and the expense ratio for that is 0.06%. The reason why it's important to know what the corresponding ETF is because if you are not with Vanguard, you are going to be put in a position where you might have to pay a significant amount of money in order to purchase a Vanguard fund. For example, I have both Merrill Edge and Schwab account, and Merrill Edge will charge you $10 if you want to purchase a Vanguard mutual fund. And Schwab is even more outrageous. I have seen it as high as $49 to purchase a Vanguard mutual fund. Therefore, it is always good to know what the corresponding ETF is. That way you can have those same holdings and that same performance without having to pay the mutual fund fee to another brokerage who is not Vanguard. Now let's look at how it compared to the S&P 500. As you can see here, initially the comparisons were pretty close. At some point after the 2020 crash, the gap started widening. And as of December 31st, 2021, if you had invested with both of these funds, your Vanguard High Yield Dividend Index Fund would have been approximately $3,600 lower than the S&P 500 Index Fund. I looked up this comparison using Portfolio Visualizer. Towards the end of the video, I am going to include a short little demo of how you can use Portfolio Visualizer to compare different funds. If you are enjoying this video so far, don't forget to hit the like button so the algorithm knows that it's good, and of course subscribe for more content. If you think any of the information that I provide here might be helpful to somebody else, be sure to share it with them. Next, we have VGSLX, and VGSLX is the Real Estate Index Fund. This fund is best for investors who are looking to seek diversification through real estate. A lot of people want to invest in real estate. They are interested. They know it's a great wealth building tool. They don't want all the active work that it takes to manage a rental property. They don't want to deal with bad tenants. They don't want to deal with eviction moratoriums. This is a great way for them to achieve this. The inception date of this fund is November 12, 2011, and the minimum investment is $3,000. The expense ratio for this fund is a little bit higher. It is 0.12%, but it is still pretty low at $12 per year per $10,000 invested. And the corresponding ETF is VTIAX. And I'm including the expense ratios for all the ETFs as well because they're not always the same. There are circumstances under which the ETF expense ratio is actually lower than the mutual fund expense ratio. Now let's compare how Vanguard's Real Estate Index Fund performed relative to the S&P 500 Index Fund. As you can see here, at inception, the Real Estate Fund was performing nearly identical. And after 2012, there was some seesawing going on where some quarters one fund would perform better and the other fund would perform worse. But the gap started widening in 2018. And after the COVID crash of 2020, the S&P 500 just blew the real estate index fund out of the water. If two identical investors had each put $10,000, one in the index fund for the S&P 500 and the other one for the real estate fund, the difference would have been staggering. The person who invested in the S&P 500 index fund would have been ahead by $17,392. Our third fund that we're looking at today is the Vanguard FTSE Social Index Fund. The ticker for this one is VFTAX. This fund is best for investors who are seeking ethical investing options. ESG stands for environmental, social, and governance. These are non-financial factors that measure some specific standards that align with people's values. Just like anything that is relatively new, ESG investing styles has its own critics. Some people do say that it is a gimmick, but I say people will do what works best for them. If it makes you feel better that you are investing in a company that does not have any human rights violations, does not pollute the environment, and if that matters to you, I think it is good that you have the choice. The inception date for this fund is February 7th, 2019. The minimum investment is $3,000. The expense ratio is 0.14%. It is the equivalent of $14 per year per $10,000 that is invested. However, at the time that I'm recording this video, I could not find a corresponding ETF. Now let's look at how VFTAX performed against the S&P 500. You can see in the beginning, it was almost identical. There really was no deviation until January of 2020. However, the summer rebound really separated one fund from the other. This is the first fund that actually outperformed the S&P 500 out of all the ones that we looked at. However, a word of caution, inception, you'll notice that this fund only came about in early 2019. Before we go dismissing the S&P 500, the tried and true OG, I recommend that we give VFTAX a little bit more time to season. Our next fund is VEXPX. That is the Vanguard Explorer Investor Fund. This fund is best for investors who are seeking opportunities in small and mid-sized companies with a lot of growth potential. I took a look at their annual report, and some of the companies that they invest in include Live Nation, Match Group, which is the company that owns all of the dating sites like Tinder, Match.com, Plenty of Fish, ZipRecruiter, Roku, Etsy. The inception date of this fund is December 11, 1967, which I thought was very interesting. If the company was founded in 1975, how can the inception date of the fund precede the creation of the company? In the 1960s, Jack Bogle was working at Wellington Management. I don't really know the facts behind it, but if somebody else who's watching this video knows, please let us know. I'm sure it's a very interesting story. The minimum investment amount for this particular fund depends on which share class you have. Expense ratios are also different. For this fund, I could not find a corresponding ETF either. Now let's find out how it performed. The line started out pretty closely, and there was a period of time where one fund was performing better than the next. But all in all, the S&P 500 won. Outside of the ESG fund, which has outperformed the S&P 500 by a very small amount, this $1,900 underperformance is actually one of the lowest underperformances out of all the other funds that we looked at so far. For people who have the appetite for risk, but see a significant upside potential, this small $1,900 underperformance might be the cost of being able to get in early on these smaller growth companies. Finally, we are going to look at VTIAX, the Vanguard Total International Stock Index Fund. That fund is best for investors who are seeking diversification in global markets outside of the United States. The inception date of the fund was November 29, 2010. The minimum investment amount is $3,000, and the expense ratio is 11 basis points, 0.11%, or $11 per year per $10,000 that is invested. The corresponding ETF for this fund is VXUS. As I stated, not all ETFs have identical expense ratios as their corresponding mutual funds. As you can see, VXUS is another one with a slightly lower expense ratio at 0.08%. On to performance. This is pretty bad. You can see, before you even see the numbers, you can just see the gap and you already know who is dominating this chart. $30,852. The reason why this is so disappointing is because I actually have this in my portfolio. It makes up approximately 15% of my portfolio. That is my target allocation. It's a way for people to hedge their bets, and that is costing us. So there you have it. This concludes the video for 5 alternative Vanguard funds. If you go to portfoliovisualizer.com, you'll see that you have a variety of options here. You can do a Monte Carlo simulator, you can do a timing model or a portfolio optimization. You can backtest a portfolio, run a factor analysis, or do some asset analytics. Typically, when I am doing a fund comparison, I go to the fund performance link under asset analytics and I click on fund performance. These are your options and these are the boxes that you would fill in with the required information. First, you would put in your ticker symbol of the fund that you want information on. Next, you would put in any fund that you wish to compare it to. And then if you wanted to add a benchmark, you would put that here as well. There is a start date and an end date if you're looking for a specific time period. If you do not select an end date, it just gives you the most recent available data as of market close. If you do not put in a start date, it will give you the performance for the entire fund's history. Or if you are comparing several funds, it will automatically do the start date as the inception date of the most recent fund. In this case, I am going to put in a ticker to show you how it works. I put in RKK, that is ARK's Innovation ETF. Next, I am going to compare it to VTIAX. VTSAX, which is the total US stock market. For the benchmark, I'm going to use the S&P 500. And while we are using Vanguard, I'm just going to go ahead and select VOO. I am not going to put a start date in. I'm going to leave that blank. For the end date, I'm going to use December 31st as my end date here. And then when I click on view performance, as you can see, November 2014, because the inception date of ARK was October 30th, 2014. It gives you a description of the fund, the amount of holdings, the expense ratio, and then if you scroll to the bottom here, it will show you the comparison. And what it does to really help you visualize it and understand what those returns mean, it assumes that you invested $10,000 equally across 3 of these funds, and then it tells you what your ending balance would have been if you had left that money invested. And of course, also it shows you some additional information like the returns for the best year's performance and then the worst year as well. So that is it, Portfolio Visualizer. Please let me know in the comment section below if you've ever heard of these funds, if you would consider investing in them. If so, why or why not? I look forward to hearing from you.
I would like to continue sharing my thoughts on all things money with you. So I would appreciate it if you could help out the channel by liking this video and sharing it with anyone you think might benefit from it. If you want to see more content, be sure to subscribe and hit that notification bell so you can know when new videos come out. I'll see you in the next one.